Hello and welcome to Startup Street. I'm Arundhati Ramnan and with me is Shruti Mishra. These are the top headlines from the startup world. Oyo has pre-filed a fresh DRHP with SEBI to raise $400 to $600 million through an IPO. Sources tell CNBC-TV18 the IPO size may be revised within the $400 to $600 million range, all of which will be a primary issuance to repay most of its debt.
Go Digit Insurance refiles draft papers for a $440 million IPO after addressing the market regulators' concerns related to the company's employee stock plans, which has stalled the offering for months, Reuters reported. The IPO comprises a fresh issue of shares worth 1,250 crore rupees and an offer for sale of 109.4 million shares.
Zest Money is staring at multiple layoffs and its founders are seeking outplacements for the impacted employees a day after PhonePe called off the deal with the BNPL platform due to concerns of due diligence. As per a Money Control report, the founders held a town hall and informed employees about layoffs across departments.
The leadership team of an academy will take up to 25% pay cuts for FY24. The announcement comes a day after the EdTech unicorn fired 12% of its workforce in yet another round of layoffs. The salary cuts are permanent and can go up to 25%, CEO Gaurav Munjal said in an internal note.
The government unveils a new foreign trade policy aiming to nearly treble exports from current levels to $2 trillion by 2030, extends special benefits for e-commerce by doubling the value of exports through courier services, also aims to provide a fillip to export of drones, cryogenic tanks and certain chemicals.
Italy's data protection agency opens a probe into OpenAI's ChatGPT chatbot over a suspected breach of the AI application's data collection rules. The agency also accused ChatGPT of failing to check the age of its users. The app is supposed to be reserved to people aged 13 and above. Well, those are the headlines we are tracking for you this evening. Education-focused fintech startup GrayQuest's recently raised $7 million or 56 crore rupees in a Series A equity funding led by Pravega Ventures with participation from leading family investors as well as angel investors. GrayQuest plans to utilize the proceeds to further enhance its product offerings and scale distribution across the education ecosystem. Joining me now to take this conversation forward is GrayQuest founder Rishab Mehta. Rishab, welcome to Startup Street. Now, GrayQuest helps solve payment solutions for education fees for schools, universities, coaching and more. How many institutions and students are you currently working with and how do you plan to use the proceeds to scale this up?
Hey, thanks, Arundhati, and thanks for having me on the show. GrayQuest today works with almost 5,000 plus education institutions. These institutions are across preschools. So we have some of India's largest preschool chains that are working with us, for instance, EuroKids. In the schooling ecosystem, where almost all of the top 10 chain schools use GrayQuest to power fee collection for their parents. Higher education, which is colleges and universities in India, some of India's largest universities like Amity, Sharda, Geetam University, BITS Pilani is recently signed up, also use GrayQuest to power fees for fee collection for their parents and students. So we're pretty much present across the education ecosystem. And what we enable institutions to do is we enable education institutions to provide multiple fee payment options for their parents and students. So, and which makes it easy and convenient and affordable for these students and parents to pay their fee to the education institution.
Okay. So, Rishab, in terms of what you offer currently with respect to fee payment solution, what are the wide areas you want to enter in terms of additional product offerings?
So, to the contrary, I think we're just getting started in our journey to power one of the goals that we have is to be the largest payments platform in the education ecosystem. India's education ecosystem grosses almost $100 billion of fees every single year, and this is growing good 15-16%. Even if you look at from a single family, and what the data that we have is a typical family in India is almost spending 20 to 24% of their annual household income on their children's education fees, right? Now, this ecosystem is fairly underserved in terms of the payment solutions that are bridging the gap, both for the education institution to enable them to collect fees in more digital and easier manner, and for the parents by providing them more flexible payment options. So we feel this, this large ecosystem is severely underserved right now. And, we think we're just getting started. Of course, we have some marquee education institutions that are already using our platform, but we're yet very much in day zero, as we say it. And, we have a lot of headroom for growth just in our core product offering, at least for the next 18 to 24 months.
Okay.
And that's pretty much the area of our focus.
All right.
The fundraise will also help us augment our core offering and scale the distribution across the country. And that's pretty much our focus area right now.
Okay. Rishab, like you mentioned, that Indians are paying approximately $100 billion in education fees annually. Tell me how much of this share is being processed on your platform, and how do you see the growth trajectory from here?
Correct. So, this 100 billion number, for instance, right, to give you some additional context, the total e-commerce category size in India is about $50 to $60 billion annually. And of course, that's growing as well, right? But education ecosystem is nearly 2x of the total e-commerce, which is all of these large companies that we speak of, right? And that just gives you context on the scale of, and the impact of this ecosystem in the Indian, broader ecosystem at large. Now, coming to your question of, how much are we processing? As I said, we're just getting started. But what a number that I could give you is the institutions, the 5,000 institutions that we have already partnered with, process about $2 to $2.5 billion of fees, right? So even when we work with some of the largest institutions in the country, even they are just yet processing maybe 2 to 2.5% of the total fee collection that's happening. So there's just a lot of headroom for growth, as I spoke before.
Okay. So, Rishab, what sort of margins then are you able to clock on payment solutions, especially with your zero interest fee options and complimentary insurance cover? Is there room for expansion here? What kind of profits are you clocking, if any?
Sure. So, effectively, in our payment solutions, we're giving 3 payment options to education institutions that they could then offer to their parents. The first one is, of course, a credit product, and this is our core monetization lever. In this credit product, we basically enable the parent or the student to split their annual or semester or quarterly fee into monthly payments. Typically, there's an interest or a processing fee that's charged for this product, and either the institution or the parent typically bears for it, right? So in most of our cases, the institution, wherever we are providing credit, the institution actually absorbs the cost of credit, and it's a zero interest, as you said, for the parent.
Yeah.
So that's the first payment option. The second payment option is, we created a digital version of the post-dated check collection ecosystem that that's very widely prevalent in some of these schools and colleges. To give you further context, some schools would tell their parents that if their fee collection is quarterly, they would tell their parents to submit 4 checks, 3 of them post-dated, at the school at the beginning of the year. Now, if for a typical school with 2,000 students, that means that school would have 8,000 physical checks and keep depositing, storing them, and then deposit them at every 3 months in their bank, right? So what we've done is we've created a payment solution that digitizes this entire offering, where we enable parents to create a subscription. And the education institution can then deduct fees from the parent's bank account on the due dates without having to manage all these physical checks, and of course without taking the risk of the checks getting lost or any inconvenience due to the paperwork that is required for physical check storage. So this is the second payment solution that we offer, and the third payment solution is the online payment gateway, which is enabling a parent to pay their fees through UPI, credit card, debit card, net banking. So we consolidate all these 3 payment options in a single platform. Institutions that work with us will decide, what combination of payment solutions they want to use for their parents and for their particular use case. And typically, our charges or our revenue is percentage of each of these 3 payment platforms. Of course, the credit product will have the highest percentage, and the second and third payment option will have slightly lower charges.
All right, Rishab, we've completely run out of time, but wish you the very best in all your growth plans. And once again, many thanks for joining us on Startup Street today.
Thank you.
And from